Now coming to the chapter property income. So property income chapter, there are 4 parts of it: rental or lease of property, FHL, premium on grant of short lease, and rent a room. Now rental or lease of a property is like when you normally rent a property. Then furnished hall lettings, again, no, not much numerical questions come from the area. It's only theoretical questions. Premiums on grant of short lease, rent a room. Let's discuss each of these. First, let's go to the rental or lease of property. Like we are going to the first aspect, rental or lease of property. Let's go to that particular aspect. Okay. So here we are. Now property income is calculated by default in the cash basis, cash or receipts basis. So cash or receipts basis. I meant to put accruals or receipts, but it came as cash. So cash basis or receipts basis is the by default basis. Okay. Now remember how to calculate property income: rent received minus rent paid. I mean, not rent, sorry, rent received minus expenses paid. So property income chapter, always remember something. You're studying this chapter from the landlord's point of view. Okay. From the landlord's point of view. Okay, from the landlord's point of view, you're studying this chapter, property income, not from the customer's point of view, from the owner's point of view or the landlord's point of view. So property income, how do you calculate? Rent received minus expenses. Rent received as per cash basis, do calculate it. You have to take a look of how much of your rent is received in the tax years in 2021. And allowable expenditure means all those expenditure which you paid during the tax year, which of them are allowable. While calculating property income, dash is deductible, but dash is not deductible. Revenue is deductible. Revenue expenditure is deductible, but capital expenditure is not deductible. Always remember that. Any expense relating to the property, it is deductible, provided it is revenue expenditure. Then in the case of financing cost, what is the treatment with regards to financing cost? Now, when it comes to financing cost, do you reduce anything from allowable expenses? No. But what do? When we calculate income tax liability, we do something, we reduce an amount, the finance cost amount multiplied by 20%, we'll reduce this from the income tax liability. That is how we treat the finance cost. Remember, finance cost, we don't reduce it from the main format, like, your rent received minus expense. We don't reduce it from there, but instead of that, we do this particular calculation, income tax liability. When we calculate income tax liability, the finance cost multiplied by 20%. This is with respect to rental or lease of property. Okay. Now we saw that capital expenditure is not allowed, but the only case is when it is a domestic items replacement expenditure. That is, when you're buying some furniture from your property, it is actually a capital expenditure, but if it is replacement, then you will get relief. So let's take a look at the points there. It says there is no relief available for purchasing the furnishings. Yes, it says there is no relief available for purchasing the furnishings. Okay. I'm sorry, initial cost. The initial cost, there is no relief. Relief is available for the cost of replacing the furnishings. How do you understand that? Just take a look at the question and see whether you're buying it for the first time. Is for the buying for the first time? No relief is given. Replacement, yes. Remember, like for like replacement. Remember the washer dryers example. Always think about that. No relief is available for any cost that represents an improvement. So from these, replacement cost, you'll also reduce any proceeds amount. So that's with regards to rental or lease of property. Very simple. Now, coming to premium granted on short lease, that is the second category. We've already discussed the first category. Let's go to the second category. Okay, let's go to the second category, FHL. Sorry, not FHL. Premium granted on short lease. Let's go to the third one, which over here. So the third one over here, which is premium on grant of short lease. Premium on grant of short lease. Let's take a look at what that is. So premium on grant of short leases, you're giving a lease. Yeah. When you say short, how short is the lease? Like when you say short lease, what is the time period? Always remember that. What is the time period? So you always have to keep that in mind. When you say short lease, the time period is actually 50 years. So taxable benefit, how do you calculate taxable benefit? You calculate taxable benefit by doing, so not taxable benefit, property income. Okay, property income. So property income is, how do you calculate property income? Premium, right? The premium you receive less premium into 2% into n minus 1. Yeah, you reduce that, you get your property income. You get your property income. This is in the case when you're receiving the premium. And remember, there is no need to time portion in this case. N is a number of years of the lease. You don't have to do time portion here. This is one of the situations where you don't have to do time portion. You don't have to do time portion over here. So this is the case when you're receiving the property income. What if you're on the other side? What if you're paying the property income? If you're paying the property income, if you're the person who pays the lease, here we have discussed this particular calculation is with regards to when you're receiving this premium. What if you're paying it? If you're paying it, that means this amount divided by number of years of the lease, that particular amount is deductible from your TATP. It is an allowable expenditure from your TATP. Okay, right. Now, the next one is RentaRoom Relief. We are discussing the next one, which is RentaRoom Relief. Okay, RentaRoom Relief. So RentaRoom Relief, it's very simple. So RentaRoom Relief is like when you're giving one of your rooms for rent. How is it taxed in UK? The normal way, that is rent received minus expenses. We can do it that way. Yeah. Or RentaRoom Relief method, which is rent received less the fixed amount. What is a fixed amount? What is a RentaRoom Relief fixed amount? So RentaRoom Relief fixed amount is 7,500. So these are the two methods. In the exam, if they don't tell you what method to use, just do both of them and take the lower amount, because obviously from tax point of view, you would want to pay lesser tax. And always remember, from as far as paper tax is concerned, there are 52 weeks in a year. 52 weeks a year. Okay, there are 52 weeks a year. Now, let's talk about FHL for a while. Now, let's talk about FHL, okay, furnished holiday letting. Okay, speaking about FHL or furnished holiday letting. So, an accommodation is considered as FHL when all of the following conditions are satisfied. That is, we are actually giving it for rent for at least 210 days each tax year. Okay, that is, it is available for rent 210 days, and out of these 210 days, at least 105 days we are actually giving it for rent. That is 210 days it is available for rent, but maybe nobody's occupying it in all those 210 days. If it is let for at least 105 days, then actually it is an FHL. And one more point is there, it cannot be let to one person for more than, it cannot be let to one person more than 31 days. See, the whole point of an FHL is kind of like your your property income is different from FHL. Property income is like you actually enter into a contract. So FHL is kind of like a holiday home. You go to a place like a resort, you get that, right? So that is a furnished holiday letting in the UK. So that is considered as a furnished holiday letting, and the income from there is considered as property income, and it must be located in the European Economic Area. Okay, just keep that in mind. Now, one thing that is actually asked as a theory question is, what are the advantages of having an FHL? What are the advantages of having an FHL? This is very important. What are the advantages of having FHL? What are the advantages? There is no finance cost restriction. So no finance cost restriction. There is no finance cost restriction. Okay, there is no finance cost restriction. Then capital expenditure is deductible. Capital expenditure is deductible. Okay, from FHL it is deductible. Then the income from FHL is part of. So FHL income is part of relevant earnings. Okay, relevant earnings. Then another one is ROR, BADR, and GR is available on sale of FHL. That is, if you are selling the FHL property, then there is something available, something like that available. Okay, when ROR, BADR, and gift relief is available. So these are the advantages of FHL. So keep in mind all these advantages. Then one more aspect, two aspects which I did not mention before is, so coming back to this point, so we know by default it is cash basis. By default, property income is cash basis, but there are certain situations in which we can compulsorily use the accruals basis, and that is, okay. So if cash receipts, like if the cash receipts are greater than 150,000, then we need to use the accruals basis. Then Okay, if the cash base is greater than 150, we need to use the accruals basis. Then, so in some cases, we can elect to use the accruals basis. We can claim to use the accruals basis. If you're doing that, okay, we should do it within 22 months from end of tax year. Within 22 months from end of tax year. Okay, end of tax year. Okay, then in the case of companies, the only option they have is accruals basis. Then another thing which I did not mention was with regards to property business loss. When a property business loss comes, what do you do? When a property business loss comes, what you do is you carry it forward. The only loss relief available for property business is to carry it forward and deduct it from the first available property profits in the future. Okay, with regards to property business loss, just keep that point in mind. So these four aspects are important: rental or lease of property, FHL, short lease premium, and renter room relief. That's all about property income.